So welcome everybody, it's Stuart here from Hot Forex. Welcome to our latest webinar. This one is on the Donchian channel trading and the background to such an event. Usual admin before we get going. Welcome everybody, it's here. Direct's asking, is there a national holiday in the US? Is it better not to trade on that day, or should you only avoid the USD currency pairs? Direct, Forex market is open 24 hours a day, 5.5 days a week. Okay. However, obviously the cash markets are closed today. It's the national holiday. It's Independence Day, 4th of July, big holiday for the Americans. So therefore the volumes will be low. So on a day like this, when there's low volumes, you can get spikes in volatility. And as traders, we like volatility because we don't care whether we're going to go long or short. It doesn't matter. We just want, but we want the thing to be moving around that we're trading. But these volatility spikes can be, false ones or not induced properly. So just be careful on a day like this. But yes, it's fine to trade today, and there's been some quite strong trends, and we'll see that when we drill down into the shorter time frames later on, which we should have plenty of time today because it's very simple. This Richard Donchian's approach, but anyway, more on that in a minute. So let's just go through some of the admin that we need to do before we get going. Okay, so welcome everybody wherever you are. Hope you're all well today in the world, and my slides. So usual issues. If you've got any issues with GoToWebinar or your device, please try restarting. Obviously put questions in the chat window. Anything I don't understand, explain clearly, because remember, it's always the teacher's fault, it's never the student's fault. Okay, I either speak too quickly, don't explain things clearly enough, and please email me at webinars@hotforex.com if there's anything you don't understand. I'll ask me to slow down. Basically, we've got plenty of time today. So disclaimer, it's very important. The material is provided as a general marketing communication for information purposes and does not constitute independent investment research. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation, or indeed a solicitation for the purpose of buying or selling of any financial instrument. All information provided is gathered from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users acknowledge that any investment in FX and CFD is characterized by a certain degree of uncertainty, and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. And finally, this communication must not be reproduced or further distributed without prior written permission. So today, those of you that are new, I don't know how many new names are in here today. Those of you that have heard all this 100 times before, I apologise, but there you go. This is me. I'm a trend trader myself. Richard Donchian, I've known about his approach for many, many years, going back to the 80s when I first moved down to London. My background, basically, I've worked in the City of London for over 20 years. I've been trading my own money since 1997. I have 4 key mantras: probability, simplicity, multiple time frames, and most importantly, psychology. This business is a psychological business. It's not listening to old guys like me prattling on, tell you what to do. Watching to the latest gurus, or having the very latest robot or EA, or this will make you $1 million in 2 weeks approach. It's about knowing yourself, accepting that you lose a lot in this business, and that's just part of the business. If you can't cope with losing, go and do something else. But there isn't another business in the world where you can have a lot of losing, do it wrong a lot of the time, and still make money at it. And it's just a mind game of actually getting that clear in your head, and that's what makes people give up too quickly, because they haven't got a system, got no discipline, got no patience, and they can't accept losing. If you can do that, you can move forward. It can be a very, very straightforward business. Not easy, but quite straightforward and simple, and I will see that today. So why is this slides not want to move? Next. So today, hopefully, and this is my plan, is that you will understand the basics of the Donchian channel trending and the background of it. And it was brought right up to date. Well, I'm saying right up to date. Back in the 80s, when I first came across it, the famous turtle traders. I don't know. Has anybody in here heard of the turtle traders? Richard Dennis and William Urquhart from back in the 80s. It was a well done, Bruce. I thought you might say yes for some reason, Bruce. So anyway, I'll touch on those guys as well, because their principles is based on that. and if you've seen the film Trading Places, that was based on the work of Dennis and Eckhart, basically, with what was the comedian in that called? I can't remember. But again, that's another film from the 80s. I look at different ways. He talks about channel hugging or running with the channel. You can use it as against the longer high time frame. And I use it. I use a derivative of it in my system where I'm going against the higher trend or against the prevailing trend, just because you can do it both ways. That works quite well. It's a great system for when you're running with the trend. You can sort of gives you confidence to scale in and scale out of positions. And I'll explain what all that means if you don't understand what scaling in and scaling out means. But that's good if you've got a good capital size and you're trading multiple lots or multiple micro lots or multiple mini lots, whatever size it is, and you can just scale in and scale out as the trend unwinds. And that's the same with all sort of trend trading. It works on multiple time frames, multiple settings. There's a certain default setting. It was developed for certain markets, but it works across all markets very well. It works across all time frames very well, even down to the 5 minute and the 1 minute, and we'll see that later. And we should have time later on as well to actually bring up some live charts and see it working, rolling out in live times, hopefully. So Richard Donchian, who was he? Who is he? Is he still alive? Is he still with us? Well, no, he's not, bless him. Richard Donchian, he's an Armenian American, around at the big turn of the century, and so many of these good gurus, gods, kings, call it what you will, were around at that time. So he's a contemporary of Mr. J.P. Morgan. He was a contemporary of the legendary Jesse Livermore. He's a contemporary of all these early technical analysts when technical analysis was sort of first becoming an art or a science. Call it what you will, but he was a trader. He traded futures and commodities. He traded on the futures exchanges in Chicago and New York, and he did it. He wasn't one of these guys. There's so many people, particularly in my position now, that tell you what to do or show you what to do, show you idealized charts, show you idealized setups, and it all looks great. Especially when you're looking at trends, because it's easy to go back and find a trend that's worked. Oh, look at that, it's working because we're in a trend. And at the moment, now today, we're in some strong trends as far as the dollar, because the dollar's, as forex traders, the dollar's really strong. So we're in these strong trends. So these trend trading techniques work very, very well when the market's trending. But as we all know, the market doesn't trend all the time. In fact, it only trends about 30-40% of the time. The rest of the time it tends to be going sideways, depending on the time frame you're looking at. So Richard Donchian developed his approach based on real life surviving in the markets, and he's known as the father of the managed funds. So he was the first to put a managed fund together. People, give me your money and I'll manage it for you. He was the father of that. He was and part of his approach, or the key to his approach, was this idea that he created this trend following, that futures and commodities prices, when they get into a trend, they can run and run and run. And that's what it was all about. And it rose back to popularity again, I say, in the mid-90s, 1994, I think the first turtle traders were put together, and then in 1985, Richard Dennis and William Eckhart. Richard Dennis was another commodity trader, futures trader, and he came up with the idea that traders can be taught what to do. Okay, it's just a matter of follow. If you have a rules-based system, you can take them, like you can take a camel to water and it'll drink. The theory is, or you take a horse to water and it should drink. So we can teach people how to trade. His colleague William Eckhart was less convinced. He thought traders were born rather than made. So they not had a bet, but basically they tested it out, and they put an advert in the New York Times, also in the Financial Times in London, for people to come and trade this. And so it started in '84, and it had a team of about 21 people. December, I think, end of '84. Then they did it again at the end of '85. They taught them over a series of weeks, and then they let them loose with real money. So he was giving them real money of his own because he was a successful futures trader. Richard Dennis give them, capital to go on with, and some of these guys have turned it into millions and millions of dollars over the years, following this trend, or this turtle trading as it's known now, system based on Donchian's work back at the beginning of the 20th century, when Jesse Livermore was making all his millions and losing all his millions as well. So it's a tried, tested, very simple, rules-based strategy. It's relatively conservative because something that Donchian talked about on my early lunch, talked about as well a lot. I'm not going to touch on it today, but he was very keen on risk management as well. That's something he spent a lot of other part of his time talking about as well, was risk management. So it's simple, rules-based strategy, relatively conservative, that I'd say has stood the test of time over many years, and it's still used today. Big investment houses, people that want to be on the right side of the trend, waiting for a trend to break, use this approach. So what is it? Well, basically it's simply two lines, an upper resistance line and a lower support line, based on the high and low prices of the last n periods. And typically it's used on, Donchian himself developed it for the futures market and commodities markets back at the beginning of the 20th century, and he was using on the end of day prices. So the futures market opens and closes at a certain time, so it's the day price, and his end factor was 20. So today when you see this indicator on your MT4 platform or whatever other platform you're using, it's typically defaulted to 20, but you can obviously change this to fit the market you're trading or the particular asset you're trading if you want to. Obviously the shorter the periods that you're collecting data from, the more volatile the indicator will be. The longer this, so if you take this down to 5, the closer the lines will be, the upper resistance and lower support. The longer you put this number, you turn this to 40 or 50 or 60, the higher the resistance and lower the support will be. So it's all about what fits the time frames that you're trading, but typically it's defaulted to 20. And as with all indicators, the majority of people that are trading these the indicators that are produced use the default settings. So again, that creates a certain amount of volume as well. So the Donchian channels look like a combination of moving averages and Bollinger Bands. So that's what they are, because it's all about smoothing out highs and lows, and it's also creating support and resistance, just like the Bollinger Bands do. The other key thing that they like the Bollinger Bands do, Donchian channel creates this idea of volatility. So like with Bollinger Bands, the narrower the channel, the lower the volatility, and the wider the channel, the higher the volatility. So it's very similar to Bollinger Bands in that sense, but it's a bit cleaner. There's no middle line. Some derivatives of the indicator that you can find out there, some people have actually put a midline on, like you have with Bollinger Bands, but Donchian in its purest form, when he first developed it and put it together, just has the upper line, the upper resistance line, and the lower support line. And you can guess what's coming next, can't you? Get to resistance, we're breaking out. Get to lower support line, we may be breaking down the other way. So let's see what it's about, because that's what it's all about. It's all about breaking tops and bottoms. So on your MT4 platform, it can look like this. Upper line, so here we have the yellow line here is the 20-day high, and the lower line here, the channel, is the 20-day low, and it's as simple as that. So those of you that are new, how do we, and if you want to install this on your MT4 platform and try it for yourself and see if it fits your approach, this is how to set it up. It's very straightforward. So you simply go to the Navigator tab on your MT4 or Control N. That brings up this is the Navigator one here, and all that's available to you, all the indicators, trending, the oscillators, Bill Williams volumes, auto charts, if you got it, will all pop up here. And we've got these new ones here, these ones are default now, Hot Forex. So Hot Forex Donchian should come up. So you simply double click on this tab here, and you'll get up this default. So this is the default setting, so it comes up about common input. So the input, so the default is to include last 20 bars, and the lines are red. So as those of you that can see, my lines are yellow, so I've just changed them basically. But this is a standard setting. This is on the daily time frame, and this is the 20-day high and the 20-day low. So that's the setting. If you want to fiddle with it, if you want to change it and play with it, you would need to, when it first comes up on in the indicator board here, you would need to change. You need to tick this box here where it says allow DLL imports. Okay, so you would need to, hello Croji, you would need to tick allow DLL imports, and that would allow you to change this bar to 10 or 5 or 60 or whatever you want. And then if you click through here, you click to colors, it will allow you to change the colors. So you need to change, if you wanted to do that on your charts, you'd need to click allow DLL imports and tick that, and then it would allow you to change the numbers as well if that's what you wanted to do. Okay, it will be available after I've finished. Yes, so an hour or two after I finished. Yesterday's video was a bit late getting. I think it only got posted this morning to you if you were here yesterday. But the other thing, you know, I say Donchian is works great for trends. And it's, you know, it's even not necessarily a scalper's tool, but as we'll see later, it does work down at those lower time frames as well. So that's how to set it up on your MT4 if you want to, and that's what it looks like. So here I've just changed the channels, the candles here to white and red, and taken everything else, taken the grid lines off, taken every other indicator off, because it works very, very well on its own. As we come on to see later, you can add other indicators to it to either add or to give you some sort of, you know, a different added confidence. Too many, obviously, you kind of get conflicted signals, but it's very, very simple way of trading. So we're looking for a break of the top line or a bottom line. Is it in channel? So I say it became very, very popular again about, say, back in the 80s, and it's basically, it's all about this breakout of the upper and lower line. So break of the line, either the top or the bottom. So break of the line at the top, we go long, and when I say break, I mean a break, not a touch, but it's got to break, and it's got to be the close of the candle, not just the wick. If you're using candles, obviously you're using lines or high-low bar charts, it's the same thing. It's the close of the day, because remember, when this was developed, when it was written, it was developed on particularly for day trading, end of day trading, and for commodities and futures. But so that's a key principle. So here you can get, because one of its criticisms, well, a lot of the criticism it gets is that it creates lots of false signals, like lots of trend trading strategies or moving average strategies or whatever it is you're using to find your trend. The criticism of them is they lag, the date they're after the date, and that they give false signals. So is it on this chart? Yeah. So let's go through this very simply then. So we're looking for a break. So we buy on a break of the top line, and we sell on a break of the bottom line. And our stop loss, because this is a trend trade, so he's looking for a trend to unwind, is on the reverse. So if we were going long, we're looking for a break of this top yellow line, and our stop loss is when the is back down here. We get out when it breaks the bottom line. So our stop loss would be down here somewhere as we got in here. So as you can see on this one, it didn't work. So we broke out here on this day, wherever we are. This is euro dollar. Back in January, it broke out, we went long, it went up on the next day, it went down, it's still going long, but we didn't, we haven't ran up, okay, we haven't kept going, we've turned around, looked like we were going to get stopped out because we were coming down here, so we were in profit, and then we were out of profit, then we were back in profit again, looked like it was going to go long again, because that's how this system works, it's a trend following. So if this had closed back over that, we would have entered again. So we'd entered here, didn't happen, and then we finally got stopped out here. So that was a losing trade, wasn't it? Looking like we were going to go short. It didn't happen because we turned around the next day. So that would have stopped us out of that long position back here, and possibly signaling a short position. But because this was the rules are, because this was a close of this long position, you'd wait for the next candle, and the next candle turned around, so it didn't happen. The short didn't trigger, so it's run off. So we're still waiting now. Now then, this is another example. See that the wick went through the top of the channel there, but it wasn't. We didn't go long again. This closed just on the channel, but it hasn't broken out of it, so we're not a long position. Looking like it might be going long. So, and then we go down, and then there's a break. Potentially of a short position, but again, if you can see that we didn't actually break below the channel. And as we can see now, by the time we've got to this point here, so from January through to April, we can see we're actually in a channel, aren't we? We're not in a trend, so that's why it's not working. That's why it's not triggering, let's say. So we are now waiting. So it's all about patience. So we've had one false breakout that hasn't worked. So we've had a losing trade from there to there over that period, and this just happens to be, it happens to be 3 months on this one. It could be it could be, if this is 5 minutes or 15 minutes, a much shorter time frame, but this is just on the daily time frame. So we've had a losing trend of that, and it appears now, looking at this particular chart, that we were clearly in a channel, and that's what this system is really, really good at. Victor, do I use them? I use a derivative. I have used them in the past, and I use them as a derivative of them within my system. So it's very closely aligned to what I do, which is why I like the against the trend system as well. And it's a patience-based one as well. It's good for instilling discipline, this approach, Victor. So what was I saying? So here, by now, if we look back to the left, because obviously we can't see any of this when we started out over here back in January, we're new traders. We just set our little system. Oh, look, it looks like it's going long. No, it didn't actually. We got stopped out. If we were just following this channel system, okay. But by the time so nothing's happened. Potential long didn't happen. Potential short didn't happen. We've gone up again. Nothing's happened, but we didn't get as high as it. Listen, look. Some other things. Look, that high. Those highs are lower now, aren't they? They're low. So, but interestingly, by the time we got to middle of April, it was looking. We did close below. So this is a tick, because this looks successful, because look, we've broken out. That's our entry. That's the first break. So we enter there, and we open our short, and we wait. Okay, so we wait and we wait and we wait. So again, what we're doing here, we can now, when we look back, by the time we get to the third or fourth day, and look at this, we're down. Look at this. We might have broken this low here. We might have broken out that channel. So it's now fitting our breaking the channel routine. So and there's lots of other things will come in, which I'll talk about in a minute. So that's a fairly straightforward, typical trend trade following trend. So we either open our position there and just let it run until we see it's reversing. We reversed a wee bit there, and I'll come on to that in a minute. But we've gone back to the main trend. We've reversed again, and here we're now into June now. Remember, we got in here at the end of April. We're into June. It looked like we got all the way down here. We got hundreds of pips here. So 122. It's about 122 there, and we're all the way down here at 114.80. So hundreds and hundreds of pips we've bagged. It's gone against us. We've lost, three or 400 of them. Nearly looking like this is going to go long again, but it didn't. It was just that spike on that huge day. We all remember that was the ECB day. Now we look back at it, we didn't know at the time, but we ended up down bottom again. So we're back to where we were before. We've retraced a wee bit again, but we're still going, and we still haven't close this one out. This is still running as a trend trading, even though we started to go sideways here. So that's a typical Donchian channel trending trade. Okay, and I'll come on to how to add to your and scale in and scale out of your position, and how you can add to this actual big long trend as well, because it's really good or comfortable one as well when we've got these strong trends evolving. But it takes, obviously this is the daytime, this is the daily time frame, but when these trends break, they can run and run for many days. As you see, it took us all this time really to set it up for it to break, but when it did break, it ran and ran and ran very aggressively, and lots of pips were bagged. So the stop loss with this director could be typically at the above the previous. Once you've confirmed that the channel is running, you typically would either apply a trailing stop loss above the previous previous third candle back, typically. Okay, it's another way of approaching it. Okay, so if we got in here, our stop loss will be up here, and we trailed it down as we move it. So typically not the candle behind, but the candle previous, the third candle back, or the count 2 candles back, basically at the top, the height of that candle. Okay, typically the top of the wick on that one, not the close. Okay, so the extreme, because that's what we're looking for. We're looking for a trend to develop. Okay, and I'll come on to how to do that against the trend in a minute. We'll see how that. So that's the simplicity of Donchian channels. But you've got the downside is whatever time frame you've got to be patient, wait till the candle closes. You've also got to make sure that we break the channel and not rest on the channel. We need to get outside of the channel. Okay, that's the key thing. Okay, so stop loss here would be back 2 candles back, whichever way you're going. Okay, so we're running and the trend is unwound there. This is why I say he's called the father of trend following, because here we can just, when we're on the channel and it officially breaks, he calls it his channel hugging, or the trend sticking. Call it what you will. You add your position, you add patience, and you wait, and you just wait for it to trend down, trend down. So what we were saying, so we were this one, if we're trailing our stop loss down here, it's gone against us here, and I'm gonna come on to this one on the next slide about how we go against the trend. So this, we've been down, 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 and it's reversed quite aggressively because it's engulfed that candle, it's engulfed that one, so it's looking like it may be going up. So for a couple of days we could take that against the trend, but we still have our long position open because we're still long, because even this reversal here on this one didn't take us out of the close of that. Actually it did, that one didn't. That would have taken us out, so we'd have closed that one out there if our stop loss had been here. But we could have returned to this, gone re-entered on the following day here, whatever that was in May, because we're then back out of the channel. So play this 2 ways. So we've entered here initially, it's a run down, run down, run down. We've scaled in. We thought, are we confirmed? Yes, we're confirmed. Yes, that's definitely confirmed. So if we'd opened with a very small position, say 0.1 of a lot, we could have had another, bigger lot size, depending on the size of the position you want to take. So you scale in, and the beauty of scaling in and scaling out, I'll come on to in a minute, is obviously protects you when it does reverse against you. So here, we've added to our position, it's turned against us, we've been stopped out on the initial long position, short position, but we could have also, as this is turned round, taken this against the trend as well. So this would have triggered a new against the trend trade, even though we were still short. So we've gone against the trend because we've turned around quite significantly on that first candle reverse. We've entered, so we're still short, but we've entered a long one as well there. Our long position has turned against us, so we our short position, if we're trailing our stop loss down, would have probably taken us out around about here, and our long position going here would have taken, that wouldn't have worked, would it? Would have turned around and we would have lost there, but we would have re-entered for another short position there when we've gone back out of the channel. This is it was developed for the daily time frame corridors, and that's the best. What it does work on, we'll come on to that in as you see in a minute, as the trends unwind. So again, we entered short again here, and we've run this one down. It's turned against us again. So 1, 2, 3 candles back. We're still short. We've taken out there, but when we could have taken it against the trend trade there for see if we're going to get back to the top of the channel. We spiked it, we didn't close there, but then we've turned around and gone back again. So our short position, we've had 2 there on these 2 strong moving trends down. Okay. I would please love the recordings of my computer, just install or go to webinar. So I just joined. It's okay, don't worry, we'll get the recording back to you. So that's a very, very a very simple system when we're sort of hugging the channel as we're in the top bottom of the channel. So remember, this is the remember we're talking about support and resistance over the last 20 periods here. So we're waiting for a break of the channel. And there we go. We've broken it. The support level here is broken. We've initial entry there, and we just add to our position as the trend unwinds. Obviously, we don't know as this unwinds. We still have no guarantee that this is going to keep going. But if we trail our stop loss down, it keeps us with these longer term trends. You know, what Donchian tended to do himself was have his stop loss like way back up here on this turn, which is my approach quite often as well. So your stop loss is initially quite large, but it's way out, and once the trends are in, you don't get stopped out. And it also allows you, so instead of trailing your stop loss to the third channel behind, is that allows you to take these against the trend trades as well when it turns around. So here, as this has come down, you can go against the trend. You would obviously we'd enter there thinking this is that's quite a significant turn for moving back up here, but it's turned around. So your stop loss is quite tight because you're not because you know you're going against the major trend. So once you know your stop loss would have been down here, so you'd have been stopped out and lost that wee bit there, but the following day you would have had another trigger that the big trend is back on, and so it's confirmation that this trend is, yes, that's really good. So it's, in a sense, that's, although you've lost this against the trend trade, it's a confirmation that yes, this is still really, really rolling and really, really good. Okay. No, Prince, no, I'm not saying it has to be a trailing stop loss, but lots of people use it as a trailing stop loss. What Donchian did himself, sorry, I was answering Doretta's question. What Donchian did himself was, like I do, or I do, like Donchian did, the entry for me, if I was, this is just on Donchian channels, but if again, this was my system that was triggering here, my stop loss would be up here where the trend broke, where it turned, okay, because you can see, in fact, it might have even been up to the recent high, but initially it would have been there. It's easy to say that now because we've seen this come down there, but it would have probably started up there. My initial stop loss would have been back up here, as that if that was my my entry point there, and that's what Donchian did as well. What I'm saying is you can bring your stop loss close if you want to be the top of above the height of the previous third candle behind where you get into. Okay, so no, absolutely does not have to be trailing stop loss. And then, as we've just seen, the trailing stop loss would have taken us out on this reversal here, whereas the stop loss that was all the way back up here obviously would have perhaps moved it down as this is really unwound, so it wouldn't be all the way back up here, gathering lots and lots of margin, but not perhaps as close as 3 candles behind. Okay, but that's one way, that's one approach of taking it. So as you can see there, that against the trend one as ran, that's good. But so here, if we'd had our stop loss following us down, but not as close as 3 candles, we'd have still kept the long short position as we went long there as well. So yeah, actually it's a bit technically it probably would have taken us out because it's been such a retrace, that one. But that big candle there would have taken us back down as well. Okay, so it's a very, very strong trend trading idea. And again, you're getting some sort of heads up that this retrace is much more significant than the next retrace. So it might be time to close the whole thing as we've gone back there. But as you can see, we've gone back to, but we're not, the trend's flattening out now and stopped. And so you could see that we now creating some sort of support. So 1, 2, 3 key support levels as the channel's going sideways. So here we've got another channel developing potentially here, as we've got here. So we're now waiting for another break of the channel, and that's as simple as it is. Okay, the against the trend one I've just talked about already, but you can see. So here, so that was a losing trade. That didn't trigger. That didn't trigger. We got in here. We've run down. So if our stop loss is back up here where the main trend turned, which is what Donchian would say, we can run this one against the trend here for a little short, whatever the the ATR might be, like I do, for the few days. Yes, so we win that one as well, and then confirmation that we're back on the major trend there, and off we go. Here we're against the trend again, so yes. And when we get to here, should we be looking to close out our longer term trend? We've been in it all this time. Let's not get too greedy. So yes, the trend has perhaps broken. Yes, we've come back down to here, but again, this is now confirming that the trend has ran, and we're in a consolidation phase. And where are we going from here? And this is, this is bang up to date. So, the trend still is your friend, but you can still take these two against the trend trades with this system as well. Okay, very, very powerful, simple system as well. That's why I really, really like it. There's not a lot of other things on there. You're just waiting for the red or the white candle to break above the yellow line or below the yellow line, and then make your decision, and then act decisively. Okay. And as I said, there's a few other rules. So that one would have been a losing trade. It looked like the second day we got in here. The second day it was looking, whoa, look at that, we made all that. But again, we would have split. So if our stop, if we were trading the stop, so the turn on this one, we don't want it would have been here. So we wouldn't. Again, it would have coincided with the bottom there as well anyway. So we wouldn't have been taken out till that point then as well. So, and I say this looks great, doesn't it? Because it's not an idealized chart. It's just what's happened recently. We've got these strong trends in the euro dollar in particular here. This is, say this is bang up to that. I haven't gone hunting for a particular chart to use today, but this is a really good example of it. The old Donchian, very simple against the trend, and just channel hugging idea. So hugging the channel top or bottom, and also against the trend, two key approaches for this strong trend trading idea. Say default setting 20. Play with it, see how it gets on, and apply it to different time frames. You can also, as I said at the beginning, some of the key things are that you get these false breakouts, and some of it, although. So that's a false breakout, isn't it? It's broken and it's closed the day under the line, the Donchian channel. So it's a false, and it's closed out within a losing trade within. Where are we? If that was 3 days back, if we were using that one, we'd kept our losses short. But the main stop loss would have been up here, and we wouldn't have actually been stopped out, would we? Because we would have been up there, would have gone against us. So we'd have still actually been in on that one, but it was a long time before it actually unwound there. So if our stop loss had been up there, if we'd had the margin to be comfortable, follow the rules, we'd have still actually been in that one. If we were bringing our stop loss closer to the within 3 candles, we'd have been stopped out on that day there, so losing that amount. But then we would have had to wait for that to really unwind before it got down to there. Okay. So it's a really good example of where trailing stop loss can help and when trailing stop loss can not help. And I say in my own personal trading, I trade on the daily time frame. I use a derivative of this Donchian approach, and my stop loss tends to be, as I say yesterday, I say every time, it tends to be above the turn in the market. So again, on this one, my stop loss would have been up here, and I would have still been in that one. Overall, but it would taken a long time before it actually unwound, and I might have got bored with it before that happens, as I can do. But anyway, that's Donchian for you, both channel hugging with the trend and against the trend. The other key thing you can do, if you want to, is add other indicators to give you either confidence. So Donchian is a channel trading trending tool. So add to your trend, add an oscillator such as RSI, stochastics, to give you some sort of confirmation or rejection of these false breaks ideas. So let's go back to our first one. So our first trigger here was back here where we broke out the top of the channel. What's RSI telling us? Well, RSI is telling us, well, hang on a minute, we're actually in the overbought area, or if you can see, we go there, we're actually over the 70 level. So it's questionable. Would we still take it? Well, that's saying yes, that's saying no, perhaps not. Donchian looks like it was going to go, but it didn't. RSI wasn't quite overbought, so again, both saying stay out. This one said, Donchian said go, RSI said yes, go, we're going down still, we're not overbought, we're not oversold, but we are still pointing down. So again, both of those would have failed us. But remember, the Donchian one, we would have still, following the rules, we'd have still been in that one, and that would have been a stop. Our stop loss would have been here as we've gone long there, and we got stopped out or closed it there as we've gone, suggesting to go short. But because it was a closing of a a long position, we wouldn't have actually taken the short until the next day, when it's actually gone up and that's turned around anyway. So it's not actually, it's still, sorry, the RSI is still going down, although this is ticked up, so it's kept us out. Here, the main trigger here was a go, because we've broken below the Donchian channel, and RSI is still tipping down. So that's both of them confirmed there. So we're in there. This against the trend one. If we were looking at that against the trend, RSI was saying, well, we're overbought. But by the time we said, look, we might get in it, it's ticked up and it looks like it's going back up. So that's with us as well. So that one would have ran for against the trend little trade for a couple of days. So that would have worked out as well. Here we're out with remember we're adding, so it's lower. We're out again. This is turning round, so this is saying, look, we're back. This is again big candle there, so we're back in. We're not oversold anymore. Oh, this big move down we've had. We've been oversold all that time as this has come all the way down. This big candle here, that's saying, look, we're back. This may be going long. So again, this is an idea of like, perhaps this trend has finished. We've run out, and can we go long now? Well, let's wait for a little while, and off it went long. And yes, this was still pushing up and pushing up, and then it's rolled over again. Didn't get interesting. We haven't been oversold again. So it's still bottoming out as far as that simple one. Again, that's very simple. Just one oscillator attached to it. No, it doesn't have, Hyacinth, it doesn't have, I'm just using the daily time frame, but I'll show you in a couple of slides. It doesn't have to be for the time frame at all. It works very well on intraday time frames as well, and we'll come on to that as well. So you could add an oscillator, RSI. Another good one is the moving average itself. Remember what moving averages do? They smooth out the noise. So again, if we've added the moving average and an oscillator here. So what's this one saying? So this one was saying yes, Donchian. Moving average is saying yes because we're above this 100 period, or this, I think this is the 100 period, this blue line. So there, that's a yes, that's a yes. That one's saying a no. So we perhaps would have taken that. Next one here, to go short, we've just been through that one, haven't we? But the big move here, this trigger when the channel actually broke, all three are saying go, because we initially broke under the Donchian channel there. The RSI was still moving down, and then the big indicator, the moving average, triggered the next day or the third day. So that was the initial entry. So we could have added our big entry here on this big candle here on the day 3 when the moving average broke as well, and we're still not oversold as well. So there's still some more energy there, and as you would know with moving average, with RSI, we can remain oversold for a long time, which we have right until, and we've just trended this down, and we've just added to our position as this is unfolded. So you know, day 3 of the trend, are we still in? Yes. Day 5, are we still in? Yes. But it's time to add to our position because we're moving. We go sideways for another 3 days, add to our position again. Oh, look, we've turned around. It's quite a big candle compared to the move downs. Is it just a simple retrace? Well, probably. But do we want to take a short position and against the trend? Well, possibly. But is the main trend back in channel? Well, yes, it is. Within 5 days, we were back on trend, and we were back outside the Donchian channel, and we were off and running. We were way under the big moving average here, and we were just ticking. We were ticking around the RSI. So again, another entry there as it's ruled out. So that's how the story's put together. And just because this is the daily time frame, Hyacinth, Prince, and everybody else, it doesn't mean it doesn't work on other time frames. And it doesn't mean you have to have the settings set as you are. So here on this channel, you can just play with it and just use. If you want more triggers, you can combine 2. So here I've got the 5-day high and low, the Donchian set, the blue line here, and the 20. So we've got no other indicators on this one, but it's a tight. As you can see, we're getting more indicators on the blue, and when the blue and the yellow both align, that's pretty strong, isn't it? So that big strong indicator there triggered on the 5 and the 20 at the same time. So that was actually very positive for the old Donchian. But the 5 period would have taken us out there. So if we'd used the combination of the two, which is what Richard Donchian did a lot himself with his commodities trading, he used both the 5 and the 20 combined as well. So it's a very powerful, I say, trend trading system. But as you can see, as we're going sideways, it's not great. But when it breaks, it runs and runs and runs. Okay, so you can use the combination here. Use the perhaps the higher time frame to get in and the lower time frame to get out, much like you can do when you're trading with moving averages as well. Okay, hope that makes sense. But again, here we're all up on the daily time frame, and you keep asking me about intraday stuff or shorter time frames. It works just as well higher and lower. So here on the 15-minute, we've got a similar sort of setup with all these other indicators attached to it as well on this particular exercise. But again, you can strip them all off, and if you've got some time left, what time is it? 10 to. We'll bring them just the plain channel trading itself. So here on the 15-minute, this was literally this morning as I was putting the final of these slides together. We can see here that we've got the Donchian channel, the 100-period moving average, and the RSI. Again, I mean, you could have set this at 7, but this is the default setting. So again, default settings 20, 100 moving average, and RSI. So here, whatever time when this triggered here this morning, or yesterday, is it yesterday? Yeah, yesterday morning, 9:30 on the 15-minute, it went long here. We broke out, we're above the 100 period, so that's positive, and the RSI is still rising, and that's positive. So we got in here, it went against us initially. Our stop loss is back down here at the bottom. The turn was on this particular chart was have been down here. If we've been trading to the actual turn, we could have had it at the bottom of the Donchian channel as well, or 3 candles back, which takes us back to here, doesn't it? So we're off and running, and our target is there's a fair old few pips taken there. It's turned against us, but again, if we were only trading the Donchian channel, it doesn't close under it at all, does it? We don't break out of the channel at all, right up until here. So that could have been a long trade that had just about broke even. But would you have kept in that long? Don't know. But you can again set your target with your ATR and multiple of ATRs. Wait, still long. It didn't break out to go short, was still long. So again, it's supported by the moving average there. It's supported by the bottom of the channel. Nothing indicating there. And there we get another break here. So break of the Donchian channel, yes, we're above the 100 period, and yes, the RSI is still rising. So as you can see here, today itself, down on the 15-minute chart, it's just as effective, either with just the channel itself or with some other indicators stuck on it. So give it a go. It's very simple, very powerful. You don't need to worry about the news in that sense here, but obviously you should know this is perhaps some big news items that were coming out today, and this again, it shows you how quickly things can change. So that's a positive one. So we were long. Use our ATR. Thank you very much. Didn't break out. We touched it, and we would have entered again there. Now, so we've got an entry there. We've got another entry there as we've broken out. We've broken out there. That's another entry, and that one would have failed, wouldn't it? It's turned around against us. The turn was back here, so it would have been stopped out there, or you would have, if you'd used your 3 candle trailing stop loss, you'd have been sort of stopped out there. Again, that would be some sort of, it's that 116.65 area I keep talking about, and I was talking about in the video this morning, so we come back to there. So as you can see, it works, it's how you want to use it. And then again, the final one was here, this big move here. We'd already had these big 3 candles, and we broke. Yes, we broke under the moving average, and the moving average and the RSI was starting to move down aggressively. So there we go. We're short again, and we're still short because that's our stop loss is way up here on this one, isn't it? So we're still adding to our short position as that closed at 1:30 today. Yes, Hyacinth. Perhaps you weren't here at the beginning, but yeah, I'll show you. It is in the normal. If I go back, let's go back. How to set it up. Those of you that have arrived late, this is where it is. So you need to go to your navigator. Okay, Hyacinth, and it should pop up here with all these other indicators here. So candle groups, all these other things: gravity, high-low, Keltner, pivot, Renko. So Donchian's there. Okay, so you click on that, double-click that. And then you set it as a default. It comes as a red line, right? But if you want to change it, you need to click this box here, the DLL, when it first comes up, when you first double click on it. Okay. If you want to change the colours and change the number of bars that you're including, but it comes as red lines, and 20 periods is the standard setting. Okay, so that's Donchian channel, and Richard Donchian, one of the godfathers, certainly of the mutual funds and the investment funds industry, and one of the original technical traders, and been around for a long time. and taken up and become very, very popular in the mid-80s with the rise of the turtle traders, and very, very famous and very, very successful gang of guys that made millions and millions on the futures trading these strong trends, basically, with strong stop losses and very good risk management as well. If you want more on the turtle traders, there's all sorts. I just googled Richard Dennis, William Eckhart. These were the two guys. It was originally Dennis's idea. Eckhart was his partner. Today, two of the students, Michael Colville and Curtis Faith, one of the things that Dennis and Eckhart did when they put the turtles together, they signed them all to a vow of secrecy. And I can't remember whether it was Colville or Curtis was the first to actually break ranks about 10 years later, because it all became big public knowledge about the mid-90s. It's 96, 97, something like that. And I think it was, I can't remember which one of these two was first to brag. It might have been Faith, actually, I think. Or perhaps he wasn't a turtle. I can't remember this, the details now, but I remember at the time. But Michael Colville is a big trend trader. He's got his own website now about trend trading, on particularly on stocks, American. In the Market Wizards, Ed Secocha is a big trend follower, and lots of the guys that Schwager has interviewed for his a Market Wizard series of books tend to be trend traders as well, waiting for the trend and running the trend and just letting them run. So there you go. That's Richard Donchian and the Donchian channels. Good luck with it. Have a play with it. I quite like it because I'm a trend trader, swing trader. But I say it does work, as you can see here. Just you even drill it down to the 15-minute. It does work on these lower time frames as well. And it works very, very successfly. So thank you for your time today. Those of you that haven't got the app, do download it. It's very, very straightforward. All the prices are on there, all our news is on there, all our analysis that we write is on there as well. It's very, very straightforward. Lots of webinars. We're here for you as well, remember. If there's anything you want us to do or stuff we haven't covered, please ask us and we'll endeavour to put webinars together. If you want webinars in different languages, please again email us, ask us for different languages. We've got lots now in foreign language. We're adding to them all the time, so it's not just English. So scalping tomorrow. Donchian works very well down at these 5-minute time frames with Otto. Lots of people get attracted to scalping because they think it's quick and easy. It's certainly quick. It's not necessarily easy, but Otto will go through that tomorrow. I'm actually on holiday from Friday for 2 weeks, so Andrea will be holding the fort here and holding it very well. So live analysis with Andrea on Tuesday the 10th. Fractals, which again is another very, very simple, wait till things have happened type of approach. Very powerful, quite simple. I like them all. I use them all the time. Stephen, what's the name of the app? What do you mean? Oh, you mean it's Hot Forex. If you go to let me just. Oops, this one. There, go to Google Play or the App Store, and it's just Hot Forex, basically, or the Hot Forex app. So it's free, obviously. No problem. Yeah, fractals, scalping, trailing stop loss. We've touched on that today. A whole webinar just on trailing stop loss and how to use and how not to use it with Otto. MACD and RSI in the middle of the month. Another two great, very simple tools, very, very popular. Lots of people use them, but using them correctly is important. My EMA crossing strategy, I'll explain at the end of the month. Emotional control is absolutely vital with Otto, and obviously live analysis every Tuesday. So do join us. We're here to help. We want you to be successful, because if you're successful, we're successful. You tell your friends about us and all the rest of it. So finish with my books. They've scribbled on here. So two key books. Reminiscences of a Stock Operator and Mark Douglas's Trading in the Zone. These two are the, if you only ever read two books. Schwager's books, as I've just touched on, are really, really good. Thank you, Doretta. I certainly will. There you go. That's what they look like. These two here, you can. They're out of. This one's certainly out of print because 1923 is a long time ago, and so and poor old Mark Douglas has died a couple of years ago. Bless him. And you can get PDF copies of these two. This is all about the psychology. Master the market with confidence, discipline, and a winning attitude. I first came across Douglas, when I first started with this one, the Disciplined Trader. and this one, but this one is easier to. He wrote this on 10 years after this one, and this one's a bit more easy to read. It's a bit dry. It can be a bit dry, but really two good books, and obviously anything that the Market Wizards stories are all the guys we mentioned today, and these are real. They're not made up stories. They're not they're not from comic books or anything. These are real people trading real money for themselves or for clients. These guys that run these hedge funds, these are real people making real money in the real market. It's not somebody talking from a textbook about what should happen. X plus Y should equal Z. These are experiences of real guys making real money, and we're talking about billions of dollars over the years as well. So well worth a read if you want to move off from first base, as I say. So I say webinars at hotforex.com. If you've got any comments or email, send me a friend request on Facebook to Stuart Hotforex Cowles. It's full at the moment, but we're trying to clean it out. And our analysis is up on analysis@hotforex.com, and any other questions, please feel free to ask. So thank you very much, everybody. I will enjoy my holidays. Thank you very much. I certainly do that. And I will see you all in a couple of weeks. Take care. All the best. Bye-bye.